The Beau Rivage Resort and Casino in Biloxi, Mississippi, opened in March 1999 as the most ambitious gaming resort development on the Gulf Coast, a MGM Mirage investment of approximately $800 million that brought the operational standards and architectural ambitions of the Las Vegas Strip to a coastal Mississippi casino market that had been operating primarily through riverboat gaming requirements since the state had legalized casino gaming in 1990. Mississippi's casino gaming law had required all casino operations to be conducted on floating vessels or on simulated floating structures, a regulatory framework whose rationale was rooted in the specific political economy of a state legislature that could authorize gaming on the water, while preserving the legal fiction that the land itself remained ungambled. The Beau Rivage was built on a floating barge attached to the waterfront, with the hotel tower and the majority of the resort's amenities on land, but the gaming operations legally conducted on the floating structure adjacent to the shore. On August 29, 2005, Hurricane Katrina made landfall on the Mississippi Gulf Coast with sustained winds of approximately 125 miles per hour and a storm surge that the National Weather Service subsequently estimated at approximately 28 feet above normal tide levels. The Beau Rivage's floating gaming barge was driven inland by the storm surge. It moved approximately 3 blocks from its original position. The storm damaged or destroyed approximately 90% of the Beau Rivage's facilities. The hotel tower, despite sustaining significant damage, remained structurally intact. The floating gaming structure was recovered from its inland position and eventually returned to service. The forensic entry point for this case is not the hurricane itself. Natural disasters are not institutional failures in the conventional sense this channel examines. The forensic entry point is what happened after the hurricane. The insurance settlement that produced the largest single property insurance payment in the history of Lloyd's of London, the regulatory response that transformed Mississippi's casino industry by eliminating the floating vessel requirement, and the specific mechanism by which a catastrophic natural disaster produced institutional outcomes that the pre-Katrina regulatory and financial environment had not been capable of generating. If this is your first case file from this channel, subscribe now because every episode adds one more layer to what you're about to understand about the architecture of institutional failure. The Lloyd's of London insurance settlement for the Beau Rivage and the broader Gulf Coast casino industry's hurricane damage represented one of the most consequential single insurance claims in the history of property and casualty insurance. The Beau Rivage's insurance program had been assembled through the London market, which had historically been the primary insurer for large-scale gaming properties in markets where the combination of asset values, operational complexity, and catastrophic event exposure made the coverage requirements too large and too specialized for the domestic U.S. insurance market to absorb alone. The policy structure that covered the Beau Rivage's hurricane exposure reflected the specific valuation challenges of a gaming property whose replacement cost incorporated not merely the physical structure, but the gaming license, the customer relationships, and the operational infrastructure that together constituted the business value of the resort. Business interruption coverage was a particularly consequential component of the settlement because the Beau Rivage's closure for the repair and reconstruction period eliminated the revenue generation that an $800 million resort development requires to service its debt obligations, and the period between the August 2005 storm and the February 2006 reopening represented a sustained period of zero operating revenue against continuing debt service that the business interruption coverage was designed to bridge. The insurance settlement process produced a forensic record of the specific valuation disagreements that large-scale catastrophic property claims generate. The insured's assessment of replacement cost, business interruption value, and consequential damages versus the insurer's assessment of those same categories, mediated by the adjustment process that Lloyd's and the London market employ for claims of this scale. The settlement figure has not been publicly disclosed in precise terms, but independent insurance industry analysts characterized the Gulf Coast casino industry's aggregate Katrina claims as among the largest property insurance losses in the history of the London market, with the Beau Rivage's individual claim being among the largest single property claims in that collection. The covenant embedded in the insurance settlement was the one written into the relationship between the coverage terms and the regulatory environment that the storm had made obsolete. At what point does a catastrophic natural disaster create the institutional conditions for regulatory reform that the pre-disaster political environment had been unable to produce? Leave your analysis in the comments below. The Mississippi Legislature's response to Hurricane Katrina's devastation of the Gulf Coast gaming industry produced a regulatory reform that the industry had been pursuing for 15 years without success in the pre-Katrina political environment. The floating vessel requirement that had governed Mississippi casino operations since the state legalized gaming in 1990 was eliminated by legislation passed in the months following the storm, allowing casinos to be constructed on land within 800 feet of the shoreline rather than on floating structures that Katrina had demonstrated were physically vulnerable to storm surge of the magnitude that Gulf Coast hurricanes could produce. The regulatory reform was justified publicly on the grounds of public safety and economic recovery. The floating vessel requirement had created casino structures that were specifically exposed to storm surge in ways that land-based construction would have reduced. And the economic imperative of rebuilding the Gulf Coast gaming industry as quickly as possible required removing the regulatory constraint that the pre-Katrina legal framework had imposed. The appraisal of the regulatory reform's economic impact requires assessing the specific value that the floating vessel requirement's elimination created for the casino operators, who had been lobbying for its removal since the early 1990s. The value was substantial. Land-based construction is significantly less expensive per square foot than floating structure construction. Land-based casinos can be expanded, renovated, and reconfigured more efficiently than floating structures. Land-based casino operations are not subject to storm surge vulnerability in the way that floating structures are. The regulatory reform that Hurricane Katrina produced was worth billions of dollars in reduced construction costs and operational flexibility to the Gulf Coast casino industry, benefits that the industry had been seeking through the political process for 15 years, and that the storm's devastation had generated in months. The appraisal failure prior to Katrina was therefore not in the assessment of the gaming property's physical values. It was in the treatment of the floating vessel requirement as a permanent regulatory constraint rather than as a political institution whose elimination was achievable under the right circumstances. The right circumstances turned out to be one of the most devastating natural disasters in American history. If the forensic analysis this channel conducts is changing how you read real estate headlines, the like button is how the algorithm knows to send this case file to the next analyst who needs it. The Beau Rivage's reconstruction and reopening in February 2006, approximately 6 months after the storm's August 2005 landfall, represented one of the fastest major hospitality reconstruction timelines in American history for a property that had sustained the level of damage that the storm had produced. The speed of the reconstruction reflected several specific factors that the forensic record of the recovery documents with unusual precision. The insurance settlement provided the capital necessary to fund the reconstruction without requiring the resort to navigate the debt markets in the period immediately following a catastrophic natural disaster, a period during which the cost of capital for Gulf Coast real estate would have been elevated by the catastrophic risk that the storm had demonstrated. The regulatory reform that eliminated the floating vessel requirement allowed the reconstruction to proceed with land-based construction standards that were more efficient and more resilient than the floating structure requirements that had governed the original development. MGM Mirage's operational infrastructure provided the management capacity and the supply chain relationships to execute a reconstruction at the speed the business interruption coverage terms and the competitive market conditions required. The denial architecture in this case is not located in the conventional places this channel has documented in previous case files. The denial was regulatory and pre-disaster. The Mississippi Legislature's 15-year resistance to eliminating the floating vessel requirement, despite the industry's consistent argument that the requirement created physical vulnerability to the storm surge events that the Gulf Coast's hurricane exposure history demonstrated, were recurring and severe. The regulatory denial was not a failure of information. The hurricane risk model for the Gulf Coast was well developed and publicly available. The vulnerability of floating gaming structures to storm surge of the magnitude that Katrina produced was a predictable consequence of placing the specific type of structure in the specific geographic location that the Mississippi coast represents. The denial was political. The floating vessel requirements defenders in the Mississippi Legislature had constructed a political rationale for a regulatory framework that served their constituents' preferences at the cost of creating the physical vulnerability that Katrina then exploited. The storm surge did not distinguish between the regulatory rationale and the physical reality. The Beau Rivage Biloxi reopened in February 2006 and has operated continuously since as the flagship of the Gulf Coast gaming market and as the most commercially successful gaming resort in Mississippi. The post-Katrina Beau Rivage benefits from the regulatory reform that the storm produced. The gaming operations that were legally required to be on a floating vessel before 2005 are now integrated into the land-based resort structure that the revised Mississippi gaming law permits, creating a more operationally efficient and physically resilient property than the pre-Katrina regulatory environment had allowed. The floating barge that was driven 3 blocks inland by Katrina's storm surge has been incorporated into the revised resort's architecture in a form consistent with the post-reform regulatory requirements. What the Beau Rivage Katrina case reveals in the context of this channel's 49 case archive is a failure category that none of the previous 48 case files has documented: the institutional failure of a regulatory framework rather than a financial structure, in which the political economy of a state legislature had created a physical vulnerability whose magnitude the regulatory framework's defenders had denied, and that a catastrophic natural disaster then confirmed with forensic specificity. The insurance settlement resolved the financial consequences of the institutional failure. The regulatory reform resolved the policy consequences. The physical reconstruction resolved the operational consequences. None of those resolutions was available through the political process that the industry had been engaging for 15 years before Katrina. All 3 became available simultaneously in the months following the storm. The forensic lesson of the Beau Rivage case is not that natural disasters are institutional failures. They are not in the sense that this channel uses the term. The forensic lesson is that the institutional failure that produced the specific vulnerability that the natural disaster exploited, the 15-year regulatory denial of a predictable physical risk, is as precisely documentable as any financial structure failure that this channel has examined. The barge floated 3 blocks inland. The regulatory framework that required it to be there had been floating in political denial for 15 years before the storm surge resolved the debate. If this case file changed how you evaluate the relationship between regulatory frameworks and physical vulnerability in the gaming industry, subscribe, because the next case examines a regulatory framework whose failure was financial rather than physical. And in the comments, given the Mississippi Legislature's 15-year resistance to eliminating the floating vessel requirement despite documented hurricane risk, what specific institutional mechanism should have compelled regulatory reform before Katrina demonstrated the requirement's physical consequences? The case file is open. This content was developed using artificial intelligence tools as part of the research, writing, and production process. All AI-generated material was subject to human review, editorial intervention, and approval before publication. Factual claims, interpretive framing, creative direction, and final content decisions reflect human judgment throughout. This disclosure is provided in accordance with platform transparency standards for AI-assisted content.